Hey YouTube, what's going on? It's Patrick here at VectorVest once again with another GME video for all you GME followers, your GME bulls out there, getting you guys hopefully prepared for the weekend and getting excited about next weekend. Just in case you aren't familiar, we are currently trying to help raise money for the Diane Fauci Fund to help adopt gorillas and also donate money to them. So for more information, click on this video right here. Also getting into it, I noticed that people who are watching these videos, less than half of you guys are subscribed. So if you go follow that video, hit that subscribe button, hit that like button, and with that, let's jump right into it here today. So I was getting ready for my trading day here today, and I noticed a headline coming up in my brokerage account this morning on a story about the stimulus checks and how they don't think people are going to be utilizing their stimulus checks going into the market and putting them into especially GME. Well, let's take a look at this together, and this is where I want to start off for today. So some of the headlines that really caught me off guard or caught me by surprise when I was reading this is going through, and obviously these people are bearish on it because they're giving a price tag of $10 and even states they're bearish on GameStop shares. And some of their talking points were that conversations involving stimulus appear to have peaked and GME shares declined over the past few days, talking about talks on Reddit. Also, the number of recent conversations including both GME and stimulus is low, once again just confirming that. And this is all based off of their bots that they have scrolling through all the Wall Street bet forums. Well, personally, I think they're going to be wrong with this. You know, yes, on Wall Street bets, you may see a decline in GME talk, and that's because those people who are really serious about the trade, who want to learn more, are moved on to someplace else. I'm not going to state it here because I don't want to see these bots get put in there, but you guys know who you are. Also, coming down further, there are some other points that we want to talk about. This guy has a price target of $10 a share. Don't think we're going to be seeing that anytime soon, but could be wrong, most likely. By the basis or by the looks of everything here today, probably not. Also talking about trading declining here over month. Now, this is something, if you've been following along with this story, is quite interesting. You know, a lot of people say that the decline in trading volume is simply due because people are done with it. The whole GME craze is waning. But I have a different perspective on that. You know, with all the news that has come to light and all these dealings and all these ways of market makers being able to manipulate the stock to force it going lower by placing trades in dark pools when people want to buy, but actually putting their sell orders on the open market to force the price lower. But I'm not going to get too much into that right now. But if things like that are going on and these short sellers have been throwing shorts at it constantly over the last month, the decline in volume may not be because people are just done and sick with the trade. The declining volume may just be due to the fact that they may be running out of these synthetic shares or shares that are available to them to be able to short the stock to keep the price moving lower. So if you're a bull, this is definitely a positive here. Then as we scroll down here a little bit more, one other interesting point that I want to point out here is that overall, yes, the stock is down, looks like about 29.1% this week as of the time this article was published, but how can you avoid the big bull in the room or the big fact that really stands out? It's still up 551.6%. This is absolutely astonishing to see where this stock has come from and where it is today. So as we scroll down here a little bit more, just make sure we don't miss out on anything else. Essentially, the whole thing of this is he's saying that people aren't going to be taking their stimulus money and putting it into the market, or putting it specifically into GME, and that they may be trying to put it into other things or spend their money elsewhere, as you can see here. Now, this is an issue that I have with this, is they're using these bots to scroll through, specifically, as they mentioned, Wall Street bets. But like I said earlier, most of these people that are really serious about the GME trade aren't in there anymore, and they may be in there, but they're not actively talking about it. They've moved on to more specific subreddits that focus specifically on what they're looking for. And this is the great thing about Reddit that I've talked about previously in other videos. So now that we have that, we kind of debunk why he thinks that. There's also another article talking about their earnings coming up, which we'll look at here in a second, what we think, or what I think. And we'll talk about that in a little bit more detail. But essentially, they're not expecting their earnings to be good. They're expecting their earnings to decline. And they think that the earnings statement coming out next week could be the catalyst that drives the stock price lower. Now, personal thoughts on that, I don't see that happening. I see, with all the publicity around it, with the new board member, Ryan Cohen, and other changes that they're making, and the fact that they're announcing they're trying to move to an e-commerce stage, I think more people or more bulls are going to be focused on what they say and the details of their plan and how they plan to change that, rather than that one specific number, because that number is looking at the historical data. Everybody is looking at the future of what GME or GameStop can become. So I'm really excited about the earnings statement next week, and we'll look at that here in a bit. But hopefully, as I mentioned in yesterday's video, we can see them announce some form of an audit for their shares, so that way we can get a handle on what exactly is happening out there with the GME shares and what shares are fake and what shares are actually real in people's accounts. So now that we've talked about this, let's go ahead, jump into the Options Pro software, which we talked about last week. It's the VectorVest options software, one of the most state-of-the-art options tools out there. If you want to find out more about it, you want to take out a trial, click on the link in the description below. But with that, let's go ahead, jump right into the Options Pro software right now. All right, so now that we're in the Options Pro software, we see at the top, we have price action here shown in candlesticks. Below that, we have that implied volatility, or that cumulative implied volatility, which is something unique only with the Options Pro software and really gives us a better feel for the actual implied volatility, because it's looking at all the options chains out there rather than just focusing on one specific one that you typically see with most brokerages. And then below there, I have the stochastic oscillator. It's one of the most commonly used by some of the biggest traders out there, and actually has become one of my personal favorite indicators to look at. It's a great overbought, oversold reading and can really help in other ways as well. But just wanted to put it on here to give you guys a good look at what's going on right now and what we currently see. Now, granted, the markets are still open. We're not to that closing bell yet, so there still could be some changes that happen. But want to take a quick look at it right now and get an idea of what we see so far. So as we can look at with the price, we saw that big short attack coming in here on the 10th of March, saw it drop down drastically, got right down to that last peak set here on the 25th of February, and then bounced back. Now we're retesting that once and twice, and this is now the third time we've touched what could be a possible support level from that previous peak at 183 roughly. And the fact that we're testing it and we're bouncing off of that shows that this is a fairly strong support and really makes a good cause that we could be seeing some more consolidation as we saw the previous weeks before the last big blast off. And that leads us going into this weekend, especially with quadruple witching day being today, and leads us into this weekend and getting excited for next week. As I just mentioned, GME has their earnings date on the 23rd of March. And that is going to be a day that us bulls are going to be really excited about. Looking here at the options chains or the implied volatility, it's interesting to note, we had a big explosive move, got implied volatility about 400%. But as that run came and took off, implied volatility actually went down, started drifting lower, and now sitting right at that 300% marker. It's interesting to point out that it's pretty much consolidated, or just right now touched that exact number of 300%. It's just a pattern that I've noticed that whole numbers, for some reason, when looking at this, seem to really stand out and give you a good idea of, the mentality or the ideas, the thought processes behind some of the bigger institutions that utilize these options trades to help really supercharge their portfolio or help leverage themselves into a trade. Looking historically though, I have the red line shown as the 200% marker. We can see before the big GME run up, these options were having a hard time. Every time they hit 200%, they dropped off like a rock, acting as a sort of resistance level here. But then that first run up that we all remember in January blasted right above that 200%, right above that 300%, peaked at around 500% roughly, and now came back down, got right down below that 200% for just a brief period of time. And then what happened? It hit that support floor, or what was previously resistance is now trading as a support floor, bouncing off of that. And now we seem to be consolidating around that 300% line. So 200% was definitely an interesting point to keep an eye on historically. But now with this most recent move and this most recent blast off that we've seen so far, it looks like 300% could become the new 200%. And if that's right, I'm really looking forward to next week. And then as we take a look at the stochastics right below here, now if you're not familiar with stochastics show overbought and oversold territory. And the key levels to keep an eye on with stochastics is 80 level, which tends to show overbought territory, and 20 level, which tends to show oversold territory. As we can see, we did peak that overbought territory for just a brief moment when we hit just shy of that 350 marker, pulled back, and now all of a sudden, we're starting to see the lines potentially curling around here, possibly heading back higher. Well, let's take a look at history and see if we have any other patterns of that or see what happened from there. Well, we hit that overbought territory, pulled back, started curling back up, and then that took us right into the big run here. Now, I typically wouldn't point this out and I really wouldn't put too much weight on this, except for the fact that GME has their earnings report coming out on the 23rd, and that is going to be a huge day for them. This is where they can, talk about what their plans are. This is where they could announce, possibly anything that will help their stockholders and help their stock price and really give some guidance going forward, which could get not only us bulls that have been in for a while excited, but also get some of the bigger institutions a clearer picture on what their plans are and have them maybe change their mind, as we've started seeing over the last few weeks, to start really favoring GME and believing in what we've already started believing in months ago, but finally starting to change their minds and get them on our side. If this can happen, that would be huge. So with stochastics pulling back a little bit, that's fine. It just gives you some more upside potential essentially right now. If you're also a stochastic fan, one level to keep an eye on is right around that 50 level. If we can hold above that 50 level or that neutral territory, that would be a really positive sign going into that earnings day. So let me know your thoughts on this. Are you guys all excited about the earnings statement? What do you guys expect to hear from the earnings statement? What do you want to hear from the earnings statement? Let me know in the comments below. Don't forget, if you haven't already liked this video, go ahead and do so now. If you haven't already subscribed, I know about over half of you aren't already subscribed that watch to this. So if you've stuck around to this far and you haven't already hit that subscribe button, go ahead, hit that red subscribe button right now. So hopefully you guys are excited about this weekend and about the earnings statement coming up very soon next week. If you are, share this with all your friends. Let's get this going. Let's have some fun. And until next time, see you guys on the moon. Bye for now.